My team joins me as we get ready for some earnings and potentially some big names here. Carolina Woods and Kevin Green return. Good afternoon, team. So, I mean, Caroline, I think Salesforce pretty much, the powerhouse name this afternoon that could revive a little animal spirits if they, blow the doors off. But it's kind of been a rough couple months for them as far as the market's been treating the stock.
Yeah, it certainly has, although I was taking a look at the companies that we're going to be covering: Salesforce, Okta, C3AI, UiPath. Salesforce is the only one that isn't underperforming the market and the only one that analysts are actually still bullish on. But it looks like we're going to see some losses following these results because it's an earnings miss here. Taking a look, Salesforce Q1 sales, I should say top line miss, Q1 sales of $9.13 billion, missed analyst expectations of about $9.15 billion. So a miss on the top line. Just going through here, I mean, it's definitely getting punished after hours here. So certainly not impressing. Yeah.
25
just
points.
Kind of going through these.
Just got erased off of Salesforce.
Yeah, $2.44 did top analyst expectations on the bottom line. The expectation was for around $2.38, but that miss on the top line definitely sending shares lower, to kick things off.
Woof. Pretty thin guidance too, but I mean, not like a big miss for their outlook. The market is just taking a hammer to anything that misses right now. 37.7 billion for the fiscal year to 38. Street was expecting 38. So, I mean, they kept their outlook basically. Are we at that point, KG, where no guidance upgrade is equivalent to, what, a 10% sell-off?
I think it's also just missing the top line number for this quarter. There's a lot of optimism when it came to Salesforce over the last couple of months here, Oliver, because of not only the AI theme, but their ability to really kind of lower the expectation, or basically slim down their business, to say the least. They got kind of back to the core structure of their business. We actually did see margins starting to improve and re-accelerate, and a lot of good commentary when it came to the AI space and their ability to expand their business and be able to weave some of their AI products into the core business that they have right now. It just does not, it's not being reflected right now in the top line, and I think the market's taking it out on the stock right now. I mean, if you were going to miss, I think the market's been a little bit more tolerable of missing on the adjusted earnings per share when you have the AI theme because of the CapEx spend that also comes with it, right? A little bit more tolerable there. But when you're missing top line, when you already have products out there in the market, that's not a really good sign, to say the least here. And you talked about their guidance. They may have met the street's expectations, to say the least here, but I think the street was looking for a little bit more from the whisper number that is out there here. So we are seeing a pullback. Let's see if it's going to hold or if we do see a little bit of a reversal after we get more commentary on the conference call here.
Yeah, the lowering of the margin guidance is definitely going to, cost them. The thing, too, is just, we got to have a reality check here on the whole AI stuff, because there's one thing to, buy up all this hardware, which has been happening, this massive land grab. This is where I've been kind of trying to make the point that the AI risk in the market, like the bubble risk, if you will, I don't only think is in NVIDIA. They sold all the chips. They're selling all the chips. They're doing amazing margins. To me, the AI risk, Caroline, is that companies that bought up the chips are not going to have immediate products for us. And then this whole batch of cloud companies that people just assume are going to develop all these new products willy-nilly. They got nothing right now. If they got something, then they would have had a guidance lift off, but they just don't. Will they? I guess, maybe, but a lot of these companies are already using in many ways, algorithms and machine learning, data analysis, all this stuff. It's so I think we got a little bit of a hype train here extending to a sector that didn't deserve it.
Although I don't know if there's all that much hype. I mean, Salesforce heading into this was only up 3% year to date. So yes, there's been some optimism, a little bit of optimism lately, but I wouldn't say it's near the hype.
Right, it was $190
the
in
AI
October.
Hardware plays. But I will say, okay, true, but I just, even in terms of this year, when you see an NVIDIA up triple digits, obviously they're on the hardware side, but in terms of enterprise software, when it comes to AI, I mean, even as we've seen with C3 AI, if AI is your ticker symbol, it's not necessarily going to do you any good. And I will say, all of that isn't keeping Mark Benioff from really touting AI capabilities with Salesforce. I was going through this report. They were talking about Q1 free cash flow was $6.1 billion, up 43% year over year. Mark Benioff said, we are at the beginning of a massive opportunity for our customers to connect with their customers in a whole new way with AI. As the world's #1 AI CRM, we're incredibly well positioned to help companies realize the promise of AI over the next decade. So obviously a little bit longer term play than...
yeah, where's the money, baby?
Yeah, a lot of talk. And very similar to the big buying opportunity that they were talking about when they last reported. But then again, lowering subscription revenue forecast for the year isn't necessarily going to mean good things for the stock, and that's what we're seeing right now with the shares down so sharply.
Bingo. A great perspective there on the commentary, because there's a lot of talk on that stuff. But, how can they do that, KG? How can you say, like, we're going to service all our clients with this great opportunity in front of us? It's incredible. It's, sunny and grassy fields ahead. And by the way, we have no changes to our outlook for guidance. Like, what? Come on.
Yeah.
That's all job owning. Job owning.
Yeah, I think it's going to take some time for the software players to be able to show their performance here, especially when it comes to artificial intelligence. I think the only company that's really doing that right now and actually seeing a return on investment is going to be Microsoft, and has been Microsoft. But these other companies, it's just starting out here. And then the other thing to kind of note too, from the software side, every single software company is talking about the AI advantages that they're going to be able to provide their customers at some point in time. And maybe we're going to see a shorter cycle than normal here, Oliver. Maybe that already becomes a little bit too saturated, and maybe the value or the margin expansion that everybody was really pricing in may not be realized because their competitors are doing the same thing. They're providing the same exact products. I'm not sure if that's going to be the case yet. That might be another item. And then we also just have to think about, take AI aside for this company, there is a significant amount of enterprise spend that does impact their top and bottom line here. And so if they are seeing a little bit slowing in certain products and it's being diverted over to AI, that could hurt some of their business units. And so that might be another reason why we're seeing this flattening out, where some software names, especially software as a service, has seen potentially a little bit of a plateau when it comes to onboarding their customers and trying to drive in new dollars. And we can see that with the remaining performance obligations for some of them.
Exactly, because there was already this problem of plateauing, customer growth, customer acquisition, sales in general. We know that, we're borderline single digits. We barely cleared double digits for Salesforce growth, and it looks like it's going to go to single digits going forward. So I'm not surprised that when the market has become expectant of them to have booming growth in products, that they're going to talk up this new technology. But if all the competitors are doing the same thing, and then you have this also massive build out by all the hyperscalers, that used to correlate with demand from all of these enterprise cloud companies and the sharing of the technology and the way it was all connected. And now it seems like all these businesses, data centers built out with all these new technology, but the product ain't there. Now, will it come? Possibly, but in the moment, I feel like we've reached our limit, Caroline, of what we're able to tolerate valuation-wise connected to this theme.
Well, I think that the stock price right now certainly goes to show that. So let's see if on the earnings call, more talk, it means anything. It could just mean additional sell-off, or maybe Mark Benioff will have some commentary that could make investors feel a little bit differently. But no, it's a show me, don't tell me, and I think the stock price is indicative of that. Correct.
There's a lot of telling here, not a lot of showing. Boy, I'm putting Dell on red alert for tomorrow. I mean, I don't know, because that one is that's going to be, we're really going to find out, because that's a company that's gone ballistic on all this whole narrative, the data center build out. Go ahead, KG.
Yeah, but the thing with Dell though, just be cautious with that because they're actually developing the CPU side of this
Right, still
business,
hardware.
which is where they're getting right, exactly. So they're not really on the software side as we are
Yeah,
seeing with
that's true.
CRM, or even if you're looking at like a Snowflake on the storage side, right? So Dell has its own specific story that not a lot of people have talked about as of late.
Yeah, that's a good point, right? It still is a step from the hardware. You know, it's getting closer because the servers are where all the, you know, cloud products will eventually be hosted. But at the end of the day, Dell still is providing a hardware function the way NVIDIA is providing a chip hardware function. So I think that's a good point. We've got AI out as well, C3 AI. We've also got Okta out. Maybe we hit Okta first real quick just because that one's always super swingy on numbers. And it's actually stuck right now at 97, so fascinating. It did dip originally, but came back. Just wanted to hit the numbers real quick because they are saying that their second quarter total revenue could pretty well get ahead of the estimates. I mean, it seems like a pretty decent little outlook there, 631 to 633 million. Street was only expecting 617. That's for the second quarter revenue. So, I mean, if you're looking for something good that's a beat here on the outlook, problem is that they've got a really checkered past, Caroline. I don't know what the market's going to need to win them back over in this stock, but it seems like a decent number.
Yeah, and it was a beat on both the top and bottom line when you look backwards, too. Q1 adjusted EPS of 65 cents, topped analyst expectations by a dime, or 11 cents actually, based on the estimate that I have. Sales of $617 million also came in ahead of analyst expectations of around 604. So not just a positive outlook, and the fact that they're raising that total revenue outlook to 2.495 to 2.505 billion. Or I'm sorry, to 2.53 to 2.54. So a raised and a beat and raise, if you will. So not seeing a whole lot of action, a little bit of gains after on these numbers, but you know, this is a stock that it's up, 6% year to date heading into this report, but still very much coming off that data security breach from October. It's a crowded space. There's a lot of competition. Cybersecurity plays were supposed to be, you know, before we talked a lot about AI, we talked about enterprise spending and how cybersecurity was so safe, and you know, there was kind of a moat around it because you know, everyone needed it. Hasn't necessarily played out with quite a few of these names, including Okta. So not seeing a whole lot of impressed, you know, despite the fact that they impressed, not seeing a whole lot of action. But let's see what they have to say on the earnings call.
Okay, yeah, I'm with you there. I feel like there's not a ton more to say about Okta, but if you got a thought, go ahead, KG. If not, we can talk C3 AI.
Yeah, no news is good news, especially with that bad press. And
exactly.
Actually seeing incremental gains when some of their competitors are seeing pretty sharp sell-offs post earnings, I think it's a win for them.
Okay. AI, just want to hit those numbers real quick. I mean, after all, it is the namesake and had an early big run. It since has kind of fizzled out a little bit, but the forecast might be enough to put it back on people's map here. You know, they were obviously an early winner in this whole category. And I think that maybe some of these numbers will kind of reinvigorate the trade, perhaps. I mean, they've got 40% subscription growth at C3 AI. They also did up their estimate, the revenue for the first quarter, about 84 to 89 million. Street was looking for 86. So their next quarter outlook looks decent. But, you know, still just generally kind of a smaller player in this still. But will that work for them, Kevin, as kind of a newcomer, well, not a newcomer, but they've rebranded towards this and have really embraced it kind of early on. Does that maybe give them a little bit more room to surprise going forward?
I think it feeds the narrative here a little bit, especially as they adjusted their guidance because of AI, and they actually did call that out, that it's going to actually accelerate, or they're going to realize revenue a little bit quicker because of this trend that we are seeing. So I think that's going to be enough to be able to maintain this stock. Now, you know, there's a lot of questions around this company, right, because of the rebranding, but for the most part, it's been able to prove itself when it comes to the fundamentals of this company and the customers that they are bringing in. So I wouldn't shortchange them by any stretch of the imagination here. It seems like they're still in the game, and they're showing by the guidance. If they were not a part of this revolution, then we would still see some stagnant, if not decelerating guidance moving forward when it comes to top line and bottom line growth. We're just not seeing that right now.
Okay. All right. Hey, AI, beating two, smaller loss than expected. It's a really different trade, Caroline, when you're making products specifically tailored and you're building out the company around this versus like a Salesforce, these other cloud companies that are really well established and, the impact is somewhat minimal on maybe, new developments. It feels like C3 is really sort of a upstart in a way.
Well, and I think also the expectation was for decelerating revenue growth for C3 AI, and the fact that the expectation was for 17% growth down from 18% growth, and they came through with Q4 revenue of 20% growth. Certainly good news. It was their 5th consecutive quarter of accelerating revenue growth that they were touting. But another, earnings report with a lot of touting of AI, or talking about full year revenue grew 16%, but demand for enterprise AI is intense. And our first to market advantage in enterprise AI positions us well to capitalize on it. Interest that they're seeing in generative AI applications is staggering. So really a lot of adjectives to describe just how strong the demand is. And we're seeing definitely the stock pop on this news, although I do think it's important to note that this was a stock that was significantly underperforming the broader market heading into this report. So the bar, I'd say, was quite a bit lower than, say, a Salesforce, if you will.
True. Okay. Absolutely. Agreed. For sure. Well said. All right. Thanks, guys. Appreciate it. We got to jump. Good stuff. Kevin Green, Caroline Woods. Another one, by the way, UiPath, another software business tied to automation and robotics. The CEO is out and the shares are getting killed. A lot of people liked this, too, as an AI trade. One of the favorites for a while there. But, a bit of a shakeup there, and the stock does not like it. So, Daniel Dines will come back as CEO. Rob Enslin steps down. Shares getting hit there pretty hard. So, all right, there's your cloud earnings this afternoon. We got to get back to one of the big stories of the day, which is the T-Mobile acquisition of